Depreciation. It's a word that gets thrown around a lot in the business world, often leaving people confused and scratching their heads. Many think it's just about cars losing value over time, but it's much bigger than that. Depreciation affects almost everything around us. Depreciation is about recognizing that things wear out and degrade. Everything has a lifespan, no matter how durable it seems. Your phone, your computer, even that fancy machine in your factory. All these items are subject to depreciation. As these assets are used, they gradually lose value and efficiency. This loss isn't always obvious, like a dent in your car that you can see. It's often hidden, manifesting as a slow decline in efficiency or capability over time. That's where depreciation expense comes in. It's an essential concept in accounting. It's an accounting method that records this decline in an asset's value over time, ensuring accurate financial reporting. It's about recognizing that your assets aren't free lunch. They require maintenance and eventually need replacement. They cost money to use, even if you bought them outright. Understanding depreciation helps in making informed financial decisions. Let's say you buy a delivery truck for your business. It's an exciting moment, a step forward in expanding your operations. It cost you $50,000, a big investment. This isn't just a purchase, it's a commitment to your business's future. You expect it to last for 10 years? Then you'll likely sell it for scrap for about $5,000. This end value is important for your financial planning. This is where depreciation gets interesting. It's not just a financial term, it's a way to understand the value of your assets over time. You've spent $50,000, but you won't be expensing it all at once. Instead, you allocate this cost over the truck's useful life. This method helps in matching the expense with the revenue the truck generates each year. This is called depreciation expense. It's a systematic way to account for the wear and tear on your truck. We need to figure out how much the truck depreciates each year. This calculation is crucial for accurate financial reporting. We take the initial cost, $50,000, minus the salvage value, $5,000, and divide that by the useful life, 10 years. This formula helps in determining the annual depreciation. This gives us an annual depreciation expense of $4,500. This amount is recorded in your financial statements each year. This $4,500 represents the cost of using the truck each year. It's a way to spread out the expense over the truck's lifespan. It's not just about the truck getting older. Depreciation reflects the gradual reduction in the truck's value. It's about recognizing that every mile driven is a mile closer to needing a replacement. This understanding helps in planning for future investments and maintaining the efficiency of your business operations. There are different methods to calculate depreciation accurately. One common method is straight-line depreciation, like our truck example. It's simple, the same amount is expensed each year consistently. Then there's declining balance depreciation. This method expenses more in the early years, reflecting that assets often lose value faster at the beginning. Finally, there's the units of production method. This is useful for assets that are used inconsistently over time. Depreciation is tied to usage, like how many units a machine produces. Choosing the right method depends on the asset and your business needs. The goal is to accurately reflect the decline in value over time. Depreciation isn't just an accounting headache. It has real-world implications that can significantly affect your business operations and financial health. For one, it impacts your taxes in a major way. Depreciation is a tax-deductible expense, reducing your tax burden and potentially saving you a substantial amount of money each year. It also helps you plan for the future by providing a clearer picture of your financial landscape. By accounting for depreciation, you're acknowledging that you'll eventually need to replace your assets, which is crucial for long-term planning. This helps with budgeting and prevents unpleasant surprises down the road, ensuring that you have the funds available when you need them. Depreciation helps you understand the true cost of doing business, beyond just the initial purchase price. It's not just about the initial price tag, it's about the ongoing cost of using and eventually replacing your assets. This ongoing cost is something that every business owner needs to consider carefully. Understanding this is key to making smart financial decisions for your business, ensuring sustainability and profitability in the long run.